and welcome to this week's look at the major news stories that could affect the markets in the week ahead. Now this week all eyes are on major data releases from the UK and the US, including unemployment, inflation, GDP and producer prices. With central banks watching closely and global trade tensions still rising, these reports could trigger significant market moves, whether you're trading the pound, the dollar or global equities. It's a week to stay alert and stay informed. So let's dive into what you need to know. Now first up, on the 10th of June, 9 AM GMT+3, all eyes will be on the UK's latest labour market data. The previous release showed unemployment ticking up to 4.5% for January to March 2025, the highest since the 3 months ending in August 2021. Average regular earnings growth slowed at the same time to 5.6% in the 3 months to March. Now that's the lowest level since November 2024, while job vacancies continue to decline, staying below pre-pandemic levels for a second straight quarter. These signs of a cooling jobs market may have supported the Bank of England's monetary policy, but they've also weighed on the British pound. Will this week's figures continue this trend? Okay, now we shift across to the US, and inflation data will be closely watched on the 11th of June at 3:30 PM GMT+3, especially with tariffs now part of the mix. Headline inflation for April dipped to 2.3%, its lowest since February 2021, while core inflation held steady at a 4-year low of 2.8%. Monthly headline and core prices rose by 0.2%, slightly under expectations. Despite new tariffs from President Donald Trump, a situation which seems to be ever-changing, their effects haven't yet shown up clearly in consumer prices, but economists warn that the real impact may surface in June or July. Will this week's report confirm easing and put pressure on the US dollar as in the previous month, or will it show early signs of price pressure? Expect heightened volatility across USD pairs as the numbers come in, and obviously don't forget your risk management techniques. Back to the UK for the next set of figures, and UK GDP data is up. Now pay close attention to the release on the 12th of June at 9 AM GMT+3. In March, the economy grew 0.2% month on month, with quarterly growth hitting 0.7%, the strongest pace since mid-2024. The solid Q1 numbers gave a short-term boost to sentiment and to the pound, but there are concerns this growth won't last due to sharp increases in inflation and economic uncertainty around global trade tariffs. Moreover, historically the UK's economics momentum tends to fade in the second half of the year. Year-on-year growth actually slowed to 1.3% in Q1 2025, down from 1.5% in Q4 2024. Now the Bank of England also flagged this growth surge as likely temporary. Will this week's release prove them right and support the British pound as in the previous month, or can things change? Traders are going to be on high alert. Okay, so on the same day as the UK GDP figures, at 3:30 PM GMT+3, we get a read on US producer prices. April's PPI unexpectedly fell by 0.5%, marking the biggest drop since early 2020 and defying expectations of a rise. Economists expected tariffs to start driving prices higher, but as yet that hasn't happened. Many still believe the full effects will emerge by summer, as we mentioned earlier, June into July. Unexpected data triggered some significant volatility, with tariff policy in constant flux. The markets are finding it difficult to find any clarity. Another surprise could spark significant intraday moves, so again, don't forget your risk management techniques. Okay, and finally, as pretty much ever, corporate earnings statements are still being released. And beyond that macroeconomic data we've already talked about, these earnings will play a key role in shaping risk sentiment. Strong results could support stock markets and boost the appetite for risk. Weaker than expected earnings may trigger some sharp corrections. Well, that wraps up this week's Market Insights. With critical data releases and corporate earnings on deck, volatility is almost guaranteed, especially across GBP and US dollar pairs. So don't forget your risk management techniques and make sure to stay updated with the latest news and analysis at FX Open's News and Analysis section on the website. Thanks for watching, and we wish you luck with your trading in the week ahead. Bye for now.